So just wanting to kick things off today with the panel here. Viewers online, please go ahead and ask questions. Encourage everybody to go ahead and engage with the panelists here too. Myself and Dawn will be monitoring the questions, so you will be heard, and I will turn it over to Dawn.
Hello all. To keep with the theme of gratitude, I'd like to thank everybody in the room for attending today and online. I also am filling in for a colleague. Katie Powell was your moderator today, and as well as on vacation. So again, thanks so much for coming in today. My name is Dawn Chadwick, and I work for American Family Insurance. And I am on the product team there and have worked with a few different products, but really have such a passion for the landlord product. And so I'll turn it over to Adam to go ahead and give his introduction.
All right. Hello, everyone. I'm Adam Palm. I'm a mortgage lender over with Summit Credit Union.
Hi, I'm Paul Hickman. I'm an agent with Keller Williams Realty.
Hi, this is David Scher. I am a third-generation American Family Insurance agent.
John Laubmeier. I'm an attorney with the Stroud Law Firm in downtown Madison. I practice litigation, business law, and I represent a fair number of landlords.
So as mentioned before, we can take questions throughout. So if questions online, we have access to those. And in the room, definitely feel free to engage with those. So we'll go ahead and get this kicked off here. We'll start with you, Paul, here. The first question we have is, what should a real estate investor look for in a rental property?
I think the most important thing to look for in a rental property is cash flow. The campus environment can be a little challenging with cash flow, and it's often the first area people think of when it comes to rental properties. So, I would look and make sure that, your opportunity pencils out and makes money on paper, for sure. And because if it doesn't make money on paper, it's definitely not going to make money in fact.
That's a great point. And then speaking of money, Adam, there, how much let's say we all go out and invest today, how much do we need to have down?
So when you're looking at a down payment, there's several different types of properties and factors that we look at for that down payment. Just to be very general, you're going to be looking at a minimum of 15% to 20% down for a one-unit property, and then anywhere from 20 to 25% for a multi-unit property, meaning 2 to 4 unit property.
Now, we were actually talking a little bit earlier, and you mentioned a keyword that I had never heard of, reserve. Can you explain what reserve is and how much of that should we all have?
So one of the things, other than just the down payment and the closing costs and other fees that you'll have associated with the purchase, we're going to be looking at cash reserves. When we talk about reserves, we're looking at a monthly payment for your property taxes, homeowners insurance, and the property taxes, homeowners insurance, and your principal and interest payment. So when we look at that, generally speaking, we're going to need at least 6 months of those in reserve, and those have to be verifiable assets, looking at savings accounts. Sometimes we can look at investment accounts as well, just depending on how vested you are in those accounts.
So really a key there is, as we get closer, we should probably reach out to our banker and have a conversation of what those reserves should be and the percentage down on the property we're looking at.
Yeah, absolutely, because there's also we're going to be looking at the amount of properties that you have. If you are a homeowner already, and this is going to be your first property as an investment property, we're going to be looking at all of those things together. So yeah, it's definitely something that you want to look at prior to searching or getting into the market.
Awesome, great, thank you. And now, John, to turn it over to you on the legal side of things. Let's say we found our investment property and we need to go ahead and fill that property, right, with the tenant. What should we put in the lease agreement, or what are key things there?
Sure. And this is going to come off as a little bit obviously biased, but I would really recommend that you do contact an attorney if you've never done a lease before and get a Wisconsin compliant lease. I know there are a lot of resources available online. I have seen online leases that say for Wisconsin use that have illegal provisions in them, that if the tenant went to court, your lease would get thrown out. So I think any attorney that works in landlord-tenant law should be able to get you a lease in an hour or two, and that would be a good investment to use again and again and again as you go forward. A couple things to think about in the lease. Obviously, you want a term, a clear definition of who's paying for the utilities, Because either some leases can be I just pay you $500 a month or $1,000 a month and that's it. Other leases could be I pay you $1,000, but then I also have to pay my own water, sewer, electricity, et cetera, et cetera. So a delineation of that. I'd also think you should think through your guest policy so that that doesn't come up as a surprise later when they have their cousin come in for weeks at a time. And lastly, another example of something that a decent attorney should be able to put in a lease that you might not find online. Under Wisconsin law, if the tenant leaves property behind, you can, if you have it in your lease that you're not going to store it, you can just toss it, you can sell it, you can do whatever you want with it, unless it's medicine or a mobile home. However, if you don't have that provision in your lease, you have to store it for 30 days, give them notice, dispose of it in a commercially reasonable manner, and really set yourself up for some headaches. So things like that should go in your lease right off the bat can really set you up for success down the road.
You mentioned a keyword there in Wisconsin. Now we have some viewers here in person and some online. Are the leasing agreement laws going to change by state significantly?
Absolutely. If you are not in Wisconsin, then contact an attorney in whatever state you would own your rental property, because rental laws really vary from state to state. And for example, Wisconsin has about a dozen prohibited rental provisions that you cannot have in your lease or your lease is invalid. And other states probably have different examples. I'm only licensed in Wisconsin, but I feel confident to give you the advice to check with an attorney in your state as far as what you need to have in your residential lease.
That's great. And those folks on the web, I will definitely turn and speak more into the microphone. Got your message there. All right. And David, on the insurance side of things, I have a home personally, but is there a difference between my home insurance and a landlord policy, and what is that?
So definitely, there is definitely a distinction between homeowners insurance and landlord coverage. The similarities is that from a dwelling standpoint or from a structural standpoint, we as your insurance agent are going to determine the replacement cost of that particular building. So we're going to look at the square footage, the number of units, the number of bedrooms and bathrooms. Is it a 1-story, 2-story, and then determine a replacement cost so that if it burnt down or blew away, we could hand you a check that would replace what you had invested. So that's an important feature that's actually similar between a home and a rental dwelling. Where it delineates is from there. So your landlord policy will have something called business interruption or loss of rent. So say, for example, you have a fire in your unit and it's going to be 90 days to remediate and restore. Well, those 90 days, you're not collecting rent because it's uninhabitable. You want your landlord policy to have a provision to pay loss of rents while your place is uninhabitable from a causation that's covered by your insurance policy. The other thing that you want is you want landlord liability coverage. So, for example, either you or your tenant's going to be responsible for snow removal. Well, let's say it's you, and you're going to be responsible for this ice and snow removal at your particular property, and your tenant or their guest falls, and it's because you didn't shovel and salt properly, they're going to sue you. So we want to make sure that we have landlord liability on your landlord policy. So in addition to insuring the structure, we're going to insure your loss of income and landlord liability.
Awesome. That's great. Now, with that, would the tenant stuff be covered in the landlord policy?
No. So tenants should really be looking at renters insurance for their own belongings. It's actually important to set that expectation up front. I think some addendums in leases will even identify that the tenant should be purchasing renters insurance to cover their own belongings. So your landlord policy, which covers the structure, does not cover the tenant's belongings. And so it's critical that they understand that they should buy renters insurance. In fact, a friend of one of my staff people's about 2 weeks ago, her unit caught on fire and lost a lot of her belongings. And when that happens, that's really, really emotional, but also a financial loss to the tenant. And as a landlord, you want to help your tenants get through that situation. So we strongly recommend that landlords encourage their tenants to purchase renters insurance.
Yep. I would actually recommend that you require it because I think it's a good screening tool. If tenant insurance is really not that expensive, if your tenants can't or won't buy it, I think it might be a good first indication that this isn't a tenant you want to be looking at. So, like I said, it's not that expensive, and if a tragedy or a disaster does strike, that it can reimburse the tenant so they can keep paying rent instead of having to use whatever money they were paying you rent with to address that issue. So I would definitely recommend it, and I would require it in a lease.
Thank you. That's a good suggestion. Renter's insurance runs maybe on average $15 to $20 a month, so it truly is not prohibitive to purchase. And in addition, your renter's insurance provides something called additional living expense. So let's use that fire as an example. So not only are you, the landlord, out the rental income for that period of time, your tenant needs to live somewhere during those 90 days or 120 days where it's being renovated, remediated, and restored. The renter's insurance will pay the additional living expense to put somebody up in, say, a temporary housing during that interim period of time. So it's another advantage to having renter's insurance.
Awesome. That's great feedback. And I mean, yeah, for that kind of price, it makes sense for the tenant to have that coverage. And now, John, you mentioned something about being in a pre-qualifier for the tenant insurance. So I have children, they're kind of messy, and maybe I don't want to rent to people with children because I know how messy they are. Maybe they're going to ruin the carpet, they might put crayons on the wall, my kids have done that. And I was wondering, can I exclude, or can any of us exclude people with children?
That's a good question. Under the Fair Housing Act, you cannot. That would be illegal. So then the question is, does the Fair Housing Act apply to me as a landlord? And the answer would be, it does not, provided that you either own a 2 to 4 unit that you live in with the tenants, or you own 3 or less single-family homes that you rent. So if you have 4 or more single-family homes or a 2, 3, 4-plex that you don't live in, then the Fair Housing Act applies, and that would be prohibited by federal law. And they do follow up on that, and when you deny someone tenancy and you tell them it's because they have kids, they can talk to the Department of Justice, and you could be in a heap of trouble. They bring federal lawsuits, and the penalties are very severe. So on the kid example, that would be that. If the Fair Housing Act does apply to you, I would completely recommend reviewing that. There are other things. For example, you can't have a policy to just exclude people with a criminal record. You have to take into account what the crime was, how long ago it was. You can't discriminate against people solely on arrests versus convictions. So if the Fair Housing Act applies to you as a landlord, definitely get familiar with that.
That's great feedback. And so there's other things among kids and criminal history that might apply in the Fair Housing Act, but that's what you have to start with, is checking if you are under that, and then also what's within it.
Correct.
Awesome. That's good to know. Oh, of course.
So under amfam.com, this is, I think, a good appropriate time just to bring this up. We have, if you go to amfam.com and then you type in the search engine, you type landlord toolbox or landlord guide, you will see in there, we actually have a link that goes to TransUnion to help with screening of tenants. I think maybe you'll talk more about screening of tenants, but it's a way for you to appropriately screen tenants from a financial background check that TransUnion uses, and I think it's called Smart Move, I think is the name of the actual website that we use. But we have a discount if you go through and you're one of our clients and you get our code. But you definitely want to screen your tenants, and you want to find a resource that can do that. So if you go to amfam.com and you type in landlord toolbox, you'll see our launch or hyperlink to that.
David, you might as well keep the mic. I've got a great question for you that kind of follows up on that.
Okay.
What if the tenant actually causes damage? Is that covered on the insurance policy?
Okay, so so there's 3 basic levels that I think you have to think about from a damage perspective when it comes to your rental property. The first one is just general wear and tear, right? So you have to expect that there's going to be general wear and tear in a rental property. So carpet and paint is just part of operations of owning a rental property. The next level, and John, you might touch on this, is a security deposit. So it's damage that is in excess of the normal wear and tear that a tenant should do to living there. And with that, you should hopefully have some security deposit that can help reimburse that particular cost. Beyond that is actually vandalism. And in my 28 years, I haven't seen it very often, but occasionally you'll run into a tenant who's mad at you, maybe as a landlord, and will actually destroy property. They'll put holes in the walls. They'll they'll do graffiti, they'll do just bad things to the unit. And your landlord insurance policy, at least ours does, has a provision that will cover vandalism. There's a $5,000 deductible, but if it happens, it will far exceed that. That we will pay for what's deemed as vandalism, but it's not going to cover wear and tear or even excess wear and tear. It has to be what's considered a vandalism. Did you want to touch security deposit?
So I'm sure everyone in this room has heard of a security deposit. This would be typically 1 month's rent or something that you take from the tenant in advance to, in case they don't pay at the end or if they cause damage. I can only speak to Wisconsin law. Under Wisconsin law, the best practice would be to give that tenant, when they move in, a check-in sheet to go through the unit and mark any damage that's there on day one so that they're not charged for that at the back when the tenancy's over. Second, when you go through at the end, clearly document, take photos of anything that you're going to charge them for. Any third-party charges, handyman, whatever that's coming in, make sure to keep those records. And then you have 21 days to write to the tenant and tell them and itemize what you're taking out of the security deposit and why, or to return their security deposit in full, or to return a part of it, depending on what you took. Security deposits are a great landlord protection against damage. They're also probably the most litigated and headache part of being a landlord as well, because if you mess it up, you can be liable for double damages and attorney's fees. There are attorneys that represent tenants, and if you wait too long or overreach, you can absolutely get in a lawsuit with your tenant. And I've seen landlords into tenants tens of thousands of dollars because they owe fees going to the Court of Appeals. And it's like, how did we get here? So it's definitely an area you want to be careful of and study up on.
So the security deposit isn't just a savings account for later. We have to be very diligent in how we use that, correct?
Correct. It has to be very carefully documented, and you have to follow the timing in the statute. And again, I'm speaking to Wisconsin law. I would expect other states have similar laws, but I can't speak to them.
Would that also be, you mentioned that bar or that threshold that could help weed some tenants out. Would a security deposit similarly fall into that situation where you require a security deposit versus not requiring a security deposit?
Yes, I think if a tenant can't pay a security deposit, that should be, at least one potential red flag that this isn't a tenant you want to rent to. I can't obviously speak to all tenants, but a lot of people get in their guts telling them this isn't a good idea. They say, I'll have the security deposit for you in 2 weeks. They let them move in. Once they've moved in, they're a tenant, whether they've signed a lease, whether they've paid anything, and you have to go through the formal legal eviction process to get them out. So yes, I think a security deposit is a good screening tool. And if people don't have that money, that should be a red flag for a landlord.
So since you mentioned the E word, what does that process look like? Is it easy? Is it hard? Is it just a couple of pieces of paper to get them out? Or what does the eviction process look like?
Okay, the hardest thing for a landlord would be if your tenants aren't paying, because when you did your cash flow analysis, you obviously planned on them paying. The number one mistake I see are landlords that have tenants that are 4 or 5 months behind. They listen to stories about how the money is going to be coming, and the eviction process isn't fun, so people aren't interested in getting it rolling. But once it starts, again, I'm going to speak to Wisconsin law, and I would imagine other laws are somewhat similar. You have to give them a 5-day notice that you would post on their door and serve them, and say, you've got 5 days to bring the rent current. If they don't, then you can file an eviction action down at the small claims court and get that process rolling. They can come in and request a hearing in front of the commissioner. If you get the judgment of eviction, you then post that judgment. The sheriff posts it. If they don't move voluntarily, then you have to get bonded movers out to literally throw their stuff on the street. The lesson in eviction is if you can work anything out with your tenant, I would highly recommend it, because going the hard way with the sheriffs and the bonded movers and everything is very time-consuming and expensive. The last point I guess I'd make on eviction is that I would probably recommend you to go through it once or twice with an attorney before you try yourself, because if you lock the doors on them or throw their stuff out, you, again, You'll find out there are some good tenant attorneys out there, and you'll hear from them, because you can't self-help evictions illegal in Wisconsin. I don't care if they didn't pay you. I don't care what they did. You have to go through the court system to evict somebody.
Awesome, thank you. So we do actually have an online question here, and we'd like to hear about from the real estate agent to speak to how to find some deals on rental properties.
I think the key to finding deals, I mean, and I'm speaking kind of in the context of the Madison area, a lot of people just go straight to the thought that there are a lot of renters in the downtown area and some of the, the nearer parts of the city. The reality, though, is there's a lot of competition there with other landlords, and a lot of them are much more experienced. So sometimes if you move out a little bit away from the city, and I would even advocate moving out of Dane County. Some of the communities adjacent to Dane County, you'll find people looking for lower taxes and those sorts of things, or as a landlord, your taxes are going to be lower. And you have opportunities there to get much better deals, because going back to my first point that cash flow is key, you can actually see more cash flow, and oftentimes you can find properties for considerably less than you might find them in town. I think also working with an agent who is connected to the investor market is a good way to go. Those agents will learn about opportunities before they hit the open market. It's kind of difficult to find properties publicly listed. So when you know that something is going to come available, and you have an opportunity to get kind of a first look, that's a huge asset. Now, as real estate agents, we have certain rules we need to follow, but within the context of those rules, there are plenty of opportunities there for getting great deals.
So that's a great point. I think some might think, oh, so to restate your question, it's what are the liabilities around comfort pets, and can you request additional security deposit for those comfort pets? Okay. Anyone on the panel feel comfortable with that?
Wisconsin has recently passed some laws involving comfort pets. I don't have it memorized. I think that they're allowed, and you can't say someone cannot have a comfort pet. It'd be kind of a ADA issue, American with Disabilities Act issue. So I think if they have a legitimate comfort pet, I can't speak to, I've heard you pay $50 online, you get a certificate, I need my pet, whatever. I'm not, that aside, if they have a legitimate comfort pet, then yes, I think you have to rent to them with that comfort pet. They would be responsible for any damage that pet causes, just like anything else. Whether you can charge them more security deposit, I honestly don't know.
One of the things that I've told my clients who are landlords, and this does come up, is that they should absolutely require renter's insurance for that, because there's personal liability associated with renter's insurance. So if that dog by chance bit somebody, at least there would be that particular renter's policy responsible, and not necessarily you as a landlord, because that is another concern. And you can actually ask to be named as an additional insured on that renter's policy when an exposure like that is there. So you can put like a liability requirement. You need to have $100,000 of liability if you're going to have a pet. And that way you get a little bit of protection. It won't help with the nuisance situations, the barking, but it can certainly help with liability of a bite. Well,
your lease should address whether or not they can have pets, and if so, what kind. So if they bring a pet in violation of the lease, that would be a 5-day notice to get the pet out. And if they don't, then that would be an evictable offense. Unless you come to an agreement with more rent or more time to get. I would, again, always try to work things out within reason. I mean, if they say, well, I can't have it out in 6 days, but I can in 10, I'd be reasonable on that. But yeah, it would be a violation of the lease. The question I answered, I'm sorry I didn't repeat it, was whether outside of comfort pets, a landlord can prohibit pets, and the answer is yes. You can let whatever sort of pets or no pets in your property. Comfort pets specifically, again, in Wisconsin, it has to be from a doctor or a psychiatrist. You can't just say, I love my dog. I love my dog. I would consider him a comfort pet, but not in a legal sense.
Great questions. Thank you.
The question is, how does hiring a management company change the legal side of things? So I think my response would be, ultimately, as the owner, you are responsible and liable if the management company doesn't do a good job. But if you research and get a good and reputable management company, one would hope that they know how to write a legally compliant lease, know how to do a legally compliant eviction. So I think if you vet and interview and get references from a property management company, and there are all kinds. I mean, there are some that manage hundreds of properties, and there are other that maybe this is their first one, so it can really run the gamut. But they should be able to help you in complying with the laws, but I would caution that that's not, it's still on you if the lease is illegal or if the eviction's illegal because you own the property. Sure, and I think we'll toss it to Adam on that one too. It depends. I think there are some costs associated with an LLC. You have to form the LLC. You have to maintain it. You probably have an operating agreement. And as he can speak to, your rates probably aren't going to be quite as good. But you do have the limited liability protection where if the judgment exceeds your insurance policy, or if you're in a breach of contract situation, you don't return the security deposit and a bunch of attorney's fees get run up against you, that's not something your insurance would cover. So it is nice to have that LLC protection, especially if you own multiple properties where you can separate it from your personal name. But if the costs of forming that LLC and maintaining it and the rate, which I'll turn it to you to talk about, outweighs that, I think you can make that argument. In a cost-neutral situation, I would recommend an LLC. But if it makes more sense financially to at least enter the landlord market with a property or two under your name, that makes some sense too.
Yeah, so there's a big difference between financing residentially or commercially. As soon as you make the decision to set up an LLC, you would have to look at commercial lending. And we have a business development team that can help you with those types of mortgages or loans as well. But if you are looking at it as a residential or an individual type purchase, again, that's where we can look at 1 to 4 unit properties. And as he mentioned, there is going to be a difference as far as the rates that are available, the programs that are available, the closing costs. All of those things are going to be impacted depending on which type of loan you want to set up.
So would you suggest then maybe early on talking with the banker and helping that inform your decision as to which route you go?
Yeah, again, I think if you're looking at it from a pure financial perspective, you can look at it and determine which route you want to go. Because again, what we talked about before with cash reserves and again, interest rates and all of those things, that's going to have a major impact as far as how you set that up. But from a perspective of protecting yourself, that's again where I would defer to speak to a lawyer or get legal consultation about that.
And I've had some experience with this too, where did not get as much communication as I would have liked as we were putting together purchase contracts, because you have to name who your buyer is. And you can always amend those right up basically until the moment of closing. But it's key that you're buying that entity or buying that property in the name of your entity. Some people will form a new entity for each property. Other people will just have one entity that they buy several properties in. But it can create some challenges also with financing. Had one client who financed the property in their private name. They bought it in their own name, and then they tried to move it into an entity, and it triggered a due on sale clause in their loan, which meant that they had to come due on their mortgage real quick and put them in a real uncomfortable position, needing to refinance that on a commercial loan.
Makes that.
Can I touch back on the liability question about the using a management company? One of the most common claims, at least in this climate, are slip and falls. So I highly recommend, if you're going to hire out somebody to do like snow removal, or a management company who's going to manage snow removal and salting, that the contractor provide you with a certificate of insurance, a certificate of liability insurance. In fact, you should be really kind of asking that of anybody who's doing maintenance at your property. So like the lawn guy or the snow removal guy or person, excuse me, it is providing you with proof of insurance, so that you know if they don't shovel and salt and someone falls, that we can go back to the contractor and say, why didn't you shovel and salt? And we can use their policy to either subrogate or actually be primary in that particular claim. And slip and falls are one of our more common and can be quite substantial. I had one last year that was over $80,000 for a slip and fall. Someone slipped and broke an ankle, and it was bad. So unfortunately, I'll be right with you, the contractor wasn't salting, he was removing the snow, and the contract didn't spell out who was responsible for salt, so it came back to us. So that little nuance is really important. Yes, sir. You're liable for maintaining the sidewalk in front of your property, and I will defer to the city statute or city ordinances, but I believe you should be having the snow removed within 24 hours of any snowfall, and you certainly should be using salt to remove the ice. Ultimately, it's going to fall on you to maintain a safe sidewalk in front of the properties you own. Or hire a contractor and make sure that they provide you with certificates of insurance, so that you've transferred that risk to them the best that you can. Ultimately, you're still responsible, but if you can transfer it, that's beneficial.
That's great. So we were talking about just a minute ago about where to buy rental property, and Paul, you had mentioned that in the city is very competitive, and maybe a little bit more rural is going to be less competitive potentially, and you might get a better deal there. Is there a certain time of year that we should be looking for purchasing a investment or rental property?
Well, a lot of it kind of coincides with the leases that are cycling through that property. For example, a lot of campus leases come up on August 15th. So a lot of properties sort of change hands around then. But different than owner-occupied real estate, rental real estate is kind of always changing hands. There are people that are just sort of getting fed up with the landlord lifestyle and they're moving out of it. There are people that want to move into it. There are oftentimes people selling off whole portfolios because they're moving to a different product. They might be they want to buy a high rise, and so they're selling off a bunch of smaller single families or duplexes, that sort of thing. So there isn't as much seasonality to it as you might see with other residential real estate.
It's good to know. So we can be on the eye any time of the year.
Yeah, absolutely. And I mean, right now, with interest rates being as incredible as they are, there are a lot of people that they've already got a house and they realize that there are opportunities for them to buy other properties with some amazing interest rates. And based on the criteria that were laid out, if you can multiply your money 5 times, if you're putting 20% down, you can go buy 5 times that much investment. There are people that are really interested in taking advantage of those low interest rates.
When the landlord's going to sell, do they offer, as part of the packet, the rent history and things like that, or do you have to ask for that or require it as part of the contract?
It's not automatic. Oftentimes people will make an offer contingent on reviewing their books, or frankly, there are a lot of unscrupulous landlords that don't keep very good books, so reviewing their books aren't that valuable. Might have to run your own pro forma on it. Talking about a rental history, you're going to want to look back and see how that property performs as best you can, but it's also important to recognize that if you buy an occupied property, you're buying it with those leases in place. You need to honor those leases at least through the end of the term of that lease. So you're going to want to review the terms of any leases that are in place on a property that you're buying also. And that's all spelled out in a contract to purchase a property.
So you're saying though, if any of us were to buy a property, we might also be buying that current tenant.
Yeah, if it's occupied, and it's leased, then you're getting that tenant too. So you're going to want to do a little bit of scrutiny of, do you really want to adopt this tenant? There are also ways you can write in there that if you've got a tenant who's being a bit of a problem, you might say that, you don't want to close until that person has either left or been evicted. And there are terms in there regarding who would pay for any eviction if that bridges over when you own the property. The tenant piece is interesting, and you sort of have to look at each circumstance as it presents itself.
I imagine sometimes that's a great opportunity to purchase the tenant coming with it. Sometimes maybe not.
Absolutely. I mean, oftentimes more experienced landlords are going to want to purchase vacant properties because they know how to screen tenants and they're not as anxious about initiating that cash flow on day one. However, if you can buy an occupied property with a good rental history and you know that that person is going to pay the rent on the first of the next month and you've got to make your mortgage payment the first of the next month, that can really comfort a new landlord.
Speaking of the cash flow, Adam, on that side of things, let's say the tenants don't pay or they're not paying on time. Is there any forgiveness in the mortgage, or is that bill still due on time every month? And is that what reserves are for?
The reserves are more for compliance and guidelines that we're looking at just for financing. If they don't make their payments, that's really something, again, I think would touch on the legal side of things. One thing I did want to touch on, though, is one of the things that we're going to be looking at is your debt-to-income ratio. And speaking of having a property that already has somebody occupying that can be a good thing for financing, because we can potentially use that income or part of that income as part of your debt-to-income ratio. So when we're calculating that, again, for the financing purposes, we're going to be looking at a certain percentage or ratio that we can go up to. And again, that rental income that might be already in place might be able to offset some of those costs.
So as a new landlord, that might be advantageous from the real estate side of things and filling the tenant and also securing the loan.
Yeah, absolutely.
That's fantastic. And so you had mentioned that the mortgage then continues to be paid. And what would you suggest people in those situations? Is that something that they need to plan ahead of time for if there is not a tenant occupying the property?
Yeah, so again, going back to how much we can use, that's actually built into the amount that we can use for your income. So generally speaking, we can use 75% of whatever that monthly rent income is. So again, if there's a lease in place, we can take that and use that as part of the consideration for the debt-to-income ratio. That 75% is taken into account, again, lack of occupancy, maintenance costs, all of those things. And so if you are receiving $1,000 in rent from that lease, again, just know that we can't use that full amount when we're calculating your debt-to-income ratio. Yeah.
So just a consideration kind of building on that is there are parts of Madison where you could buy a single-family home for $200,000, say, and rent that property out. You've got one door, one tenant, one lease. That person moves out or stops paying, your cash flow ends. As we had discussed, going to different neighboring communities, there are areas where people commute into Madison to work, but you might be able to buy a fourplex for that same $200,000. So now you've got 4 leases, 4 tenants. And if one person stops paying or moves out, you're still 75% occupied, and you are probably still making your mortgage payment, and you've got a little more cushion. So it can really reduce landlord anxiety also in a setting like that.
So that's really something to consider, is maybe a potentially diversifying your landlord book to having more tenants.
Absolutely. I mean, the term we use is either more doors or more keys.
From the more doors, more keys, does that cause more frustration, or do you think that alleviates some of that too?
Well, it means more toilets and more tenants and that's those sorts of things. So, it comes with challenges, but again, it's offset, I believe, by the reduced anxiety of what if somebody moves out, or what if I, go maybe 2 or 3 months without filling that property.
Now, you mentioned earlier pro forma and doing the financials ahead of time. Are there, and this could be for anybody on the panel, folks that you guys would recommend being on a landlord's personal advisory board for working with things like that?
I think the four of us and possibly an accountant added in are a great group of folks to consult with. I think your more experienced landlords will be in almost daily communication with an insurance agent, a lawyer, a banker, real estate agent, and an accountant. I mean, those are people that make your business run.
So to some extent, everybody locally should meet at least one of you.
Yeah,
Or
again,
all.
I think it's about, you're going to want to meet, I mean, you should meet us. But really, it's about team building. And you got to get everybody on the team, make sure everybody understands their role on the team. And it's important, too, that those individuals on the team are aware of the others so that you can all be working together for the ultimate goals of that investor versus, getting conflicting advice or strategies.
I guess I would add quickly, if you're not a handyman or handy woman, having a handyman or handy woman that you've thought about, vetted, because you're not going to have a lot of time when the toilet's overflowing or the roof is leaking, and it'd be good to have someone that you know and trust, and you've seen their insurance policy in advance that you can call, unless you want to do it yourself, which a fair number of people do.
So if we're speaking to first-time buyers, I would even suggest that before you buy that first property, that you might want to even call an insurance agent or even a banker or a real estate person just ahead. From an insurance standpoint, that's one of the costs, right? You mentioned principal, interest, taxes, and insurance, and you can actually ask us to run a cost on a hypothetical purchase. So if you know that you're buying in a surrounding community, for example, you're looking at a certain township outside of Madison, but you're looking for a 2-flat, but you want to get a sense of what that price of insurance will be, you can call us, especially if you can see one that was recently sold, and be like, what would insurance be on that? Because that's what I'm looking for. And then we're going to be able to give you a ballpark on what that expense would be. Keep in mind that we're insuring the property for replacement cost and not market value. So if it's bigger, because you can go outside of Madison, we need to insure it so that we can rebuild that bigger property. There might be 2 more bedrooms or more bathrooms. So our insurance represents replacement costs. So it could be beneficial to you just to get a ballpark by having us run a hypothetical. And I would assume the same for numbers as well, as far as interest rate numbers and taxes and things along those lines. And you might be able to give them some cost perspectives.
Absolutely. And to tack onto that, going with the team building concept and having those frequent conversations, you're going to want to know what certain things are costing, but in all likelihood, your lender, your insurance agent, or attorney, and bookkeeper, those people you're not the only investor that they're working with, and where they're probably going to be very cautious not to really give you advice outside of their scope of practice. They may be able to tell you which way the wind is blowing. That they're starting to see certain, landlords in a certain area struggling, to meet their obligations financially. Or maybe they've seen a bunch of claims of a certain type in an area, and maybe you want to bolster your coverage that way, or maybe legal experiences. So connecting everybody and good frequent conversation, I think, is key to long-term success.
Now, you mentioned that partnership, and I think that seems to be really key. Are there buildings or structures that maybe wouldn't qualify for a loan, or maybe wouldn't qualify for an insurance policy, and would that help by having that upfront conversation?
Yeah, I think, so looking at this as maybe a first-time investor, if you're looking at this as even a first property purchase, one of the things that we look at is whether it's going to be owner-occupied or just a pure rental property. So when we're looking at the differences, you can buy, say, a duplex and have it owner-occupied, and we look at that then as a primary owner-occupied residence. And in that case, again, all of the financing terms, rates, applicable fees, closing costs are going to be different than if we did this as a straight investment purchase. So if you're looking at whether it's, again, a single-family property or a 2 to 4 unit property, again, there's a difference between whether it's primary owner-occupied or an investment property specifically.
And that's important to communicate to a real estate agent as well, because a lot of real estate agents understand some of these loan programs. If they don't, they oftentimes will form a quick alliance with your loan officer to see to it that you're maybe being a little more proactive in weeding out properties that are not going to fit specific loan criteria, especially if you do fit that owner-occupied model. And also, it's important information to have because it actually gets written into the contract in the form of a loan commitment provision where you have an opportunity to escape that contract if you can't satisfy that provision.
I think, okay, so the question is about rent to owns, and if you own the property, you could sell it on what's called a land contract, essentially, which would be sort of a rent to own in the real estate realm, where you can even record it down at the Register of Deeds. They're the owner as long as they pay you on that land contract over 10 years or whatever the amount of payments and the interest rate you work out. I'd be maybe careful if you have a mortgage, if that would trigger a due on sale clause. But from a legal perspective, you could sell it on land contract to your renter over time. Quickly on I wanted to circle back on the looking at the property. Be careful that there aren't many areas where zoning prohibits renting, but it's possible. But certainly there are condos that prohibit renting, so check that out if you're looking at a condo. And there are homeowners associations that prohibit renting. So don't think, hey, I'm going out to the suburb, this house is a steal, I'm going to rent it. You buy it, you try to get your renter in there, and then all of a sudden, knock, knock, hey, you can't rent this place. That's against our covenants. And those are pretty hard to defeat, and you're probably going to be putting it back on the market or living in it at that point.
You got a question?
And for those online, that is that there's different zoning requirements for how many unrelated people you can rent to. And so check with your local zoning outside of Madison area.
So I just wanted to mention, as you're looking at properties, a couple of pitfalls from an insurance perspective. You want to make sure that the electrical systems have been updated. Insurance companies are not really happy with knob and tube is out. I don't know anybody who will insure a knob and tube property. And actually, fuses are not really liked. They really want circuit breakers, and they want 100 amp circuits per each unit. The other thing we're going to be looking at is what's the condition and age of the roof? Is it in really bad shape or is it in good shape? So that's something we're also going to look at. And how old is your HVAC system? So, I mean, these are some of the underwriting things that we're looking at from an insurability standpoint, as well as pricing of insurance. So as you're looking at properties, be aware that those are some of the pitfalls. If you run into a property that has outdated mechanicals, you may need to invest in those right up front just to get them to compliance for insurance.
And the reason behind the old knob and tube and not liking them is fire related, right? So it's in the landlord's best interest to look for that, correct?
I would say it's in everyone's best interest. Knob and tube is literally wire with like a shoelace cloth around it. It's basically a win, not if. It's a problem for buildings. I'm not a fan of knob and tube.
So probably just speaks to the point of why talking to your team of advisors up front, being your real estate agent up front, letting them know what you're looking for, what you're not from the perspective of types of properties, your agent on what you can insure and what you cannot insure. So if you need to build that into your budget to update the wiring or whatnot, maybe the property's still good, but has to be updated. Your legal advice from the perspective of what you need to know for your lease and agreement, and also how you're going to pay for that, right? That's pretty important.
And actually, speaking to the updating the electrical, that's one of those things that, an experienced agent is going to pick that out. Just like you can notice a bad roof from the curb, you're going to notice the electrical as part of your normal property tour. And the reality is, there are a lot of people that don't understand that isn't that big a thing to update. I mean, many homes for this community have all had that done, and it's not prohibitively expensive. I mean, it costs a fair sum of money, but if you're talking about buying a property that has that in place, it's possible to negotiate some of these things in, or negotiate a more favorable price and accommodate that once you take ownership. And there are a lot of people that frankly don't do their homework or don't ally with people that are going to advise them as to just how achievable that is. And so, you can sometimes leverage that to your advantage.
Yeah, so if you don't have that advisory panel, you may end up purchasing a property without that knowledge that you could have gotten for a better deal. That's great. So it sounds like we have about 5 minutes, so I just wanted to give a time check and make sure that there was any questions in the room before we asked a couple more, and then see if there's any online. And if not, we've got a couple more questions that we can fill our time up with.
The question was if it's advantageous to purchase a property, tear it down, and then reconstruct a new property because of the ages of homes. One thing I can tell you is that if you're looking at doing that type of project, you'd be looking at more of a commercial type loan structure for that, because we wouldn't be able to do something like that on the residential side. That's, again, a construction loan, so you'd have to look at commercial lending for that type of project.
I would add on to that too, sort of evaluating what your objective is. I mean, if the point is to lease this property and make money, the whole period of time it's under construction, it's not making money. And the reality is, even ugly properties rent for pretty good sums. And so if your objective is to have this thing be a moneymaker, oftentimes you're going to be at a greater advantage to put a renter in there and beautify that property while it's occupied versus tearing it down. In reality, too, a lot of older homes are built pretty doggone well, and you can do a lot to them to make them so sort of bring that neighborhood back a little bit while it's occupied. So things as simple as new windows, siding, roofs can all be done while somebody's still in it.
Which I guess I would throw in that you do owe your tenant habitability and peace and quiet, essentially. So I would disclose that in advance, maybe give them a rent break for a couple months or whatever, and say, hey, we're going to be putting siding on, we're going to be doing the roof, whatever. Otherwise, you could be get some complaints.
Yeah, like if you're updating a kitchen, you can sometimes do that really quickly between tenants, and if it perhaps inconveniences the new tenant by a little bit, you're adding value to their experience also. So they're likely to be compliant if they know that they're going to benefit from it.
I can tell you that I am seeing a lot of landlords buying older properties and renovating them. So people are doing it, they're investing in those. And so we're seeing it from an insurance standpoint, we're seeing people make that investment. I'm assuming it's working out, but we're insuring them for people.
So it looks like we've got one online question, and that was, will we be getting contacts to our expert panels? And it sounds like we will be able to provide contacts for them, so definitely reach out if you have additional questions and want to reach out to some experts.
I actually have, I brought one copy with me of one of my favorite books. Is a great resource available as an audio book or as a physical book, and I keep a stack of them in my office. So the purpose of that is to be able to hand them out to people. So anyone in person here today, I'd be happy to send you a copy, or if you're watching online, would do the same.
All right, thank you so much, online audience and folks here and present. Let's give it up for our panelist and moderator.